Hello Internet, thanks for joining me today. We are talking General Motors and if they should be part of your portfolio. Before we get started, subscribe, like, comment below. Let's jump into it. For those that aren't aware, General Motors is an American multinational corporation headquartered in Detroit, Michigan. GM specializes in the design, manufacturing, marketing, and distribution of vehicles and their parts. They also offer financial services to dealers and consumers. A couple of the major call-outs: there are over 19,000 dealers selling in over 125 countries across 6 continents and 23 time zones. 181,000 employees under 8 different brand logos. That's what GM is. You can see in the middle towards the bottom, all headed by CEO Mary Barra. GM has been in the news frequently. Much of this has been positive, including record-breaking sales in China and the expansion of 5 new manufacturing plants in the country by 2018. GM has also outlined an all-electric path towards zero emissions and has grown domestic sales by 7.5%, all of which while expanding their stock repurchase program and while expanding their portfolio through acquisitions of different companies. One of those acquisitions, just today, allows them a single-chip self-driving system, which will really put the pressure on Tesla and anyone else talking about self-driving cars. All of this positive momentum has floated the stock up and up and up. What this means for us is that the stock will likely come back down in the short term and allow us a great buying opportunity. The reason I think General Motors is a great buying opportunity is because compared to the other players in this market, those talking about the future of automotive, such as Tesla, such as Fiat Chrysler, you can see such positive momentum in these other companies, and GM is actually lagging behind these quite considerably. All of that said, GM sits at just a 6.9 PE and a price to book of just 1.5 times. The current stock price of $45 gives us a dividend of 3.38%. That is just a 23% payout ratio currently. Analysts see this with a future cash flow value of roughly $59.17. There's a lot of positive momentum and a lot of positivity in these ratios. Just to jump into the dividend a little bit clearer and show you why I think GM is the best play in this sector, well, let's compare them to a major player in Detroit and a major California startup. Ford Motor Company, with a $49 billion market cap, is the smallest of the three, has the highest dividend of 5%, but that 5% dividend represents 63% of their earnings. Meanwhile, GM, with a $66 billion market cap, only 23% of their earnings goes to the dividend. And Tesla in the middle, with a $57 billion market cap, doesn't pay a dividend whatsoever. Remember I had said so much of that news was positive? Well, some of that news requires spending money. And that would be specifically the acquisitions and the expansions into China. Here we can see that money being spent and how it runs against their net equity. This has all been an effort to stay ahead of the electric vehicle and automated vehicle push. Net margin currently sits at 5.38%. That is above the industry median of 3.6%. In final thoughts, GM has shown a great ability to adapt to the changing market and a willingness to go all in to best the impending competition, specifically Tesla. Announcing today the acquisition of Strobe, giving them that single-chip self-driving system allows them to considerably lower the cost per car in regards to automated capabilities. In fact, their chief financial officer just today was quoted as saying that this single-chip system can lower expenses by as much as 99% around the automated capabilities needed for a car. Absolutely epic cost savings. Again, remember, they announced 20 new EV models by 2023, and in my opinion, this forces competitors to both adapt to this growing market, as well as forcing Tesla to offer some variety. And I put maybe there in quotations because sometimes innovators in a market, like an Apple, can do whatever they want and people will buy it because of the name. So I put a caveat there. I don't know that it will force variety. I would just suspect it to. The indicators we looked at least in the short term, said that the stock was oversold, maybe even overpriced. But in my opinion, GM shows an excellent long-term positioning for future growth in this sector. They've already built their international and electric vehicle infrastructures. This is something Tesla continues to work towards. They have an extremely strong name in green technology, including their flagship Volt series, which won 2016 Green Car of the Year. And the biggest thing for me is that the money for this expansion has already been spent. This infrastructure is already in place, and they're ready to reap the benefits. This is in comparison to much of their competition, who still continue to promise and hope to fill those coffers and fill those promises. And lastly, the excellent dividend falls above the sector average with just a 23% payout ratio. That 23% payout ratio is significantly lower than everyone else in the market, allowing GM the wiggle room they may need if guidance isn't quite spot on. In full disclosure, GM is currently part of my portfolio and has been for about 9 months now. Thank you so much for your time. I hope you subscribe, like, comment below. If you made it to the end, give me some feedback and let me know what stocks you'd like to see in the future. Have a great day.